Hello everyone, welcome to EduTap and welcome to today's session. I hope I am clearly audible and visible. So give me a thumbs up if I am clearly audible and visible. And in today's session, we are going to discuss two very important news articles. One is about the MPC meeting that has recently happened, and in that MPC meeting only a very important decision has been taken that we are going to discuss in today's session. So the Monetary Policy Committee meeting has happened in December 2023, and now there is the UPI payment limit that has been raised. So for what particular reason it has been raised, and what is the new limit, and for what purposes the limit are there. So that all we are going to discuss in today's session. Give me a thumbs up if you can hear me clearly, okay? So good morning Rana, good morning Jayant, good morning Durga. It's so good to see all of you in the morning, and do subscribe to the YouTube channel, join our Telegram channel. Here you will get the PDF of this session, okay? So the link for the Telegram channel is given in the description box below. So now starting with the Monetary Policy Committee meeting. So the meeting has happened and the stance of the RBI is same. The RBI is not changing the Monetary Policy Committee is not changing the repo rate. That means MPC at its meeting has decided to keep the policy repo rate under the liquidity adjustment facility unchanged at 6.50%. Okay, so what has happened that the Reserve Bank of India, the Monetary Policy Committee has decided that the repo rate will remain unchanged at 6.50%. And when repo rate is at 6.50%, what will be the SDF rate and what will be the MSF rate? Okay, so how do you know? If you know the repo rate, how do you know the SDF rate and the MSF rate? So the SDF is less than the repo rate by 0.25% and the MSF is greater than the repo rate by 0.25%. So this is how you get to know that what is the MSF rate and SDF rate if you know the repo rate. So the SDF rate will be 6.25% and the MSF rate will be 6.50%. Okay, and this is the liquidity adjustment facility. This is the liquidity adjustment facility corridor through which the Reserve Bank of India, the Monetary Policy Committee, they adjust the liquidity in the economy. Okay. So here the Monetary Policy Committee has decided to keep the policy repo rate under the liquidity adjustment facility unchanged at 6.5%. So the SDF is 6.25% and the MSF is 6.75%. Sorry, it is 75% because 6.50% is greater than add 0.25%. So the MSF is 6.75%. Okay, 6.75%. It is less. SDF is less than repo rate by 0.25% and the MSF is greater than the repo rate by 0.25%. Okay, so these decisions are in consonance with the objective of the MPC Monetary Policy Committee in achieving the medium term target for the CPI inflation. And what is the target for the CPI inflation? 4%. The CPI inflation should be 4% within the range of plus minus 2%. That means the inflation should not go below 2% and the inflation should not go above 6%. Okay, so the CPI inflation should remain around 4%. It should not go below 2% and it should not go above 6%. So this is the target for the Monetary Policy Committee, that the monetary policy tries to achieve the 4% of the CPI inflation while keeping in mind the growth objective of the country, while supporting the growth of the country. Okay. How SDF can be 5.75%? There will be the difference of nearly 1%. Then it is 6.50%. Then deduct it with 0.25%. You will get 6.25%. That is SDF. Is there any confusion now? From the 6.5%, SDF is less than the repo rate by 0.25%. So it is 6.25%. Okay. So domestic economy, the real GDP. So what has happened in the domestic economy? What is the scenario of the current economic conditions? What is the macroeconomic situation of the economy? So that we will discuss. So domestic economic activity is exhibiting resilience in the economy, even though there are many of the turbulence that is coming from the outside, there is many of the problems that are going on in the world economy, in the global economy, still our domestic economy is quite resilient. Okay, continued strengthening of manufacturing activity. We have seen in our country that continuously our manufacturing activity is strengthening, as well as buoyancy in construction. The construction has also started becoming buoyant, and it has also started showing the growth tendency. Gradual recovery is happening in the rural sectors. Due to this, what is happening, that it has brightened the prospects of household consumption, because the urban demand was high. It was resilient in the COVID-19 also. It was resilient in the during the Russia-Ukraine war also. So the gradual recovery is also seen in the rural sector, because now the rural areas demand is also increasing. This has increased and brightened the prospects of the household consumption. Healthy balance sheets have been seen of the banks and the corporates. They are maintaining, the banks are maintaining, financial institutions are maintaining good CRAR, as well as they have the healthy balance sheets. They are generating the profits also. Okay. Supply chain normalization has happened. So there was a very big trouble that came during the Russia-Ukraine war. As during the Russia-Ukraine war, even during the COVID-19, the supply chain was disrupted. So now the supply chain has started to get normalized. Okay, so the supply chain normalization has started improving the business optimism. So in the country, the business optimism has also started. Okay, the businessmen, the investors, they have started becoming very optimistic. Rise in public and private capex, that is capital expenditure, has also started. Now capital expenditure has started. That means there is more of the investment that is happening in the country. So there is the increase in the public and private investment that should bolster the investment going forward also. So right now the capital expenditure has started. The investors has started investing more, the businessmen have started investing more. That will increase the investment going forward also. Improvement have been seen in the export. Now due to the turbulence in the global economy, there was the problem that the exports were lagging behind, because the global economy was facing the turbulence, due to which the demand in the global economy, the demand in the other countries was low, due to which our exports were happening low. Our supply to the foreign countries was low because the demand was low. But now the turbulence that was coming in the global economy, that has reduced to a great extent, and due to which we have seen the improvement in the demand in the global economy and the improvement in the exports in the global economy. Okay, understood the point here? Any confusion you have? So now headwinds. Now what is the, so this is the good points that we can see, but there is the headwinds that are coming from the geopolitical turmoil that is still going on. There was Russia-Ukraine war, there is also the Israel-Gaza war, we can say, that has started, or the turbulence that we have seen that has started. Volatility in the international financial markets we have also seen, as well as there is geopolitical fragmentation that has posed the risk to the outlook. But still the RBI's outlook, or the MPC's outlook, is very, very positive. How is it very, very positive? Previously in the previous MPC meeting, so the Monetary Policy Committee meeting happened in October 2023. The previous meeting happened in October 2023. In that Monetary Policy Committee meeting, the real GDP growth prospect for the 2023-24 was shown as 6.5%. That is, the MPC said that in 23-24, in this financial year, that is starting from April 2023 to March 2024, the India is going to have the real GDP growth of 6.5%. This was said by the MPC, by the Monetary Policy Committee in October 2023. But in the recent Monetary Policy Committee statement, the MPC has said that the real GDP growth prospects are higher now. The real GDP growth for 2023-24 is projected to grow at 7% and not at 6.5%. That means all the good things that are happening in our country, all the resilience that our country is showing, all the demand that is increasing, the optimism that is shown by the businessmen and the investors, that has led to the real GDP forecast to be higher at 7%. Understood? Yes. if like improvement in exports means we are exporting, we will export more, our supply will be more, we will be earning more foreign exchange. This also is a very big deal because we earn the foreign reserves through this, and it shows the resilience of our country's financial markets also. So you can understand, remember this point very well, that real GDP growth for 23-24 is projected at 7% by the Monetary Policy Committee, and this has increased from the previous forecast that was 6.5%. Now domestic economy inflation condition, what is the inflation condition? So here see, the inflation was in the July, the inflation was very high, it was 7.44%. In August, September, October. So in August it was around 6.8%. In the September it was around 5.02%. In the October it has further gone down to 4.87%. 4.87%. Now why I am telling you these percentages is to show you that you can see in the July how high the inflation was. Our CPI inflation was more than 6%. We want our CPI inflation to be around 4%. It should not go below 2%. It should not go above 6%. Still, the CPI inflation was way above 6%. It was 7.44%. That was a triggering thing for our country, that okay, something wrong can happen in the country because the inflation is very high. But the RBI and the Monetary Policy Committee said that this is only temporary, it is going to go down, and that actually happened. In August it was 6.8%. In September 5.0%. That means 0.2%. That means the CPI inflation came down from 6% mark and it was within the range around 4%. Now in October it was 4.87%. That means around 4.9%. So the CPI inflation has seen, the CPI headline inflation fell by about 2 percentage points since the last meeting of the MPC, since the October 2023 when it was 4.87%. So in the October 2023 it was around 4.9%. Okay, so 2 percentage points from 7.44%, it has fallen down to 4.9%. Okay, so you can see from 7.44% it has fallen down to 4.87% from August. The last meeting happened in August, then the meeting happened in October, then the meeting is happening in December. For the December we do not have inflation data because the month has not ended. For the November also, for now we do not have the inflation data. But in August the inflation was around 6.8% and there is the 2 percentage points decrease that has been seen from 6.8% to 4.87%. Okay, so this has been said that in October 2023 the inflation percentage was 4.9%. That was way below 6% mark. That is good. This is a sharp correction in the prices of certain vegetables. So why this has happened? Because of the correction in the vegetable prices, the deflation, that means the prices are dropping in the case of fuel, and a broad-based moderation has come in the core inflation, that is excluding. Core inflation is the inflation excluding the food and fuel. So in the core inflation also there is the moderation, there is the correction that we have seen. So you can understand vegetable prices have corrected, the fuel prices are going down because of the supply chain correction that has happened, supply chain moderation that has happened, or the normalization that has happened. Now CPI inflation is projected at 5.4% for 23-24. This is same as before. The MPC Monetary Policy Committee in the October meeting also said that the CPI inflation for the 23-24 is projected at 5.4%. So this is same for now also. Now also the MPC is saying that the CPI inflation is projected at 5.4% for the 2023-24, but in the real GDP, forecast, that has been increased from 6.5% to 7.0%. That now the MPC is saying for 23-24 the real GDP is going to grow at 7%. Okay. So this is the CPI. I hope that you must know about the CPI inflation. CPI inflation is the inflation that affects the consumers, and that's why the consumer price index includes the commodities that we consume, that consumers consume. So food and beverages is the most consumed thing by the consumers, so it is given the highest weightage in the CPI index. Okay, so the CPI index I hope you know the basics, and this is the basic idea that it is released by the NSO. The CPI inflation or the CPI is released by the National Statistical Office, Ministry of Statistics and Program Implementation, and the CPI is released by the NSO, and it is an index that includes the major commodities that are consumed by the consumers. Highest weightage is given to the food and beverages, and then the second highest weightage is given to the services, and so and so. Now coming to the conclusion, what the RBI's governor has said, that you can see that the status quo that we are keeping, that means we are keeping the repo rate constant. We are keeping the repo rate same. We are keeping the repo rate same. That means it is not a neutral stance. If we are keeping the repo rate at 6.5%, it is not a neutral stance. We are actually actively working towards disinflation. Now, what is disinflation? Who knows? What is disinflation? Disinflation means that the inflation has to be reduced. If the inflation is 6%, or let's say inflation is 8%, we have to bring down the inflation to 7%, 6%, 5%, and 4%. So this is disinflation. That means inflation percentage has to reduce. Inflation should be positive but at a very low level. Okay. So disinflation means positive inflation that is decreasing. That is decreasing. Okay. So that means RBI governor has said that if we are keeping the repo rate same, that is not a neutral stance. We are actively working towards disinflation, and that's why we are not decreasing this repo rate. Because if we decrease the repo rate, the interest rate in the economy will decrease and the consumption will increase in the economy. That will increase the prices and inflation in the economy. So if we are keeping the repo rate same, that means we are actually working for disinflation in the economy. Okay. So CPI for November is expected to be high. So it has been said that the CPI inflation for November is going to be high, and that's why the CPI inflation forecast or projection that has been shown for the 23-24 has not been changed from the 5.4%. Okay, so CPI inflation forecast is 5.4% because we expect that in November the vegetable prices are going to go high, and that's why the CPI inflation will be a little higher in November. But it has been said that the real GDP forecast has been increased for the financial year 2023-24 to 7% from the 6.5%. All of these things have been explained to you. The CPI inflation projection has been kept at 5.4% for the financial year 23-24. So this is the conclusion that you need to read. This is the statement of the governor of the RBI that you have to know, and this is the end of this news article. Now the next, any confusion here? The next news article is about enhancing the UPI transaction limit for specified categories. Now this is very important. So I'm asking if there is any confusion of the previous news article, you can ask. Otherwise we will move forward with this one. Yes, Shibanand has said that disinflation means gradual decrease in inflation. That is absolutely correct. Disinflation means that inflation percentage is decreasing, but the inflation percentage is positive. Okay, so no confusion. I should move forward then. So UPI transaction. See, first of all, UPI is Unified Payment Interface that has continued to grow in popularity. It was introduced in 2016, and since then we can see that it has grew in a very tremendous rate in the country. It has been a revolution in our country. Okay, the introduction of UPI, the usage of UPI, it was not expected at all that it will be so popular in the country, but it has been so popular in the country and it has continued to grow in popularity. So what has happened, that the transaction limit for UPI is capped at 1 lakh. That means the transaction limit maximum, the transaction that you can do is 1 lakh through the UPI in 1 day. In 1 day you can, this is the transaction limit, that is 1 lakh. Except means that there are some categories for which the transaction limit is a little higher. That means except a few categories like the capital markets, the broking, mutual funds and such, the collections, the credit card payments, loan repayments, EMI, insurance, etc. For these, the limit is 2 lakh. So for the normal transactions that you are doing to the merchant, that you are doing to the family of yours, for that the limit is 1 lakh. 2 lakh is the limit for the capital markets, for the collections, for the insurance and such. For these, the transaction limit is 2 lakh. Okay. Now in December 2021, the transaction limit for the UPI payments for the retail direct scheme, that means this is the scheme that we are going to discuss in the coming sessions in depth, but this is the scheme through which the retail investors, the individuals, they are able to invest in the government securities directly. Okay, in the primary market directly they can invest in the government securities. So the UPI transaction limit was increased for the retail direct scheme for the retail investors, as well as for the IPO subscriptions also. For the initial public offering subscriptions also, the limit was increased. IPO is what? That when a company is being brought into the market, for the first time the shares are being listed in the market, that is the initial public offering subscriptions. For this also the limit has been increased to 5 lakh. So this happened in December 2021. So what is the decision that has been taken in the December 2023, that you need to understand, that now the Monetary Policy Committee and the Reserve Bank of India has said that to encourage the UPI transactions and encourage the use of the UPI for the medical and educational services, it has been proposed to enhance the limit for the payments for the medical and educational services to the hospitals and the education institutions from 1 lakh to 5 lakh per transaction. So remember this very, very clearly, that the transaction limit is 1 lakh. The transaction limit for the capital markets, for the collection, for the insurance is 2 lakh. Particularly in December 2021, it was decided that for the IPO subscriptions for the retail direct scheme, the transaction limit will be 5 lakh. And now for the medical expenses, for the educational services, for the hospitals and the educational institutions, it has been said that the transaction limit has been proposed to increase to 5 lakh per transaction from 1 lakh. 1 lakh was the prior limit. It has been increased to 5 lakh directly. 2 lakh is not there. Okay, 1 lakh to 5 lakh directly. So I hope this is the news article. These are the numbers that you need to remember. I do not want to stretch it a lot because here the numbers are very important that you have to remember. Okay. So any confusion now, or should we move forward? No confusion? So this is the first question that I hope you will be easily able to answer, and this is the second question. Okay, this is regarding the recent update that has come. So in the statement on developmental and regulatory policies that is released with the MPC statement, with the Monetary Policy Committee statement, in this statement on developmental and regulatory policies, it was informed that the proposal has been sent regarding the increase in the limit for such transactions. So this question I hope you will be easily able to answer. Now I want to show you the students that have given the right answer of the previous session question. So it is Molly, Kingshuk, Akansha, VSSS, Manori, Rushi, Sorish, Abhay, RS Prathvin, Sonali, Namratan, Kamal, Ronak, Saurabh, Gagan, and Amit Paswan. Gagan. So these are the students that have given the right answer of the previous session question, and I can see that many of the regular students are here that have got very good marks. So you should continue getting good marks, because if you are getting good marks right now, that means you are understanding the pattern of the exam, you are understanding how to answer the questions in a faster manner and in the time bound manner. That's why we conduct the revision session, right? So do give the right answer of the homework question also. Be consistent. Okay, give the right answer of the homework question and be consistent. We are here for you. You just have to show your efforts also. Thank you very much, and I hope you have a good day today. If you have any query, you can comment down below in the comment section. I will try to answer all your queries that you have. And if you have any query, you can also call us. You can also mail us at hello@edutap.co.in. Okay. No, Durga, this is enough. Statement on developmental and regulatory policies. It has another proposals also that we will discuss in a separate session, but you do not have to go to the Monetary Policy Committee statement, because that we have covered in length in today's session, and this was all that was relevant from the exam point of view. Okay, so do give your answers in the comment section. Thank you very much and have a good day. Okay, and you are most welcome, Nilesh.